Isn't that funny? Everything is down this week except the Fun token. Now the question is why? Who is actually buying here? Is this the beginning of a rally that's going to last longer, or is this a pump and dump? Let's have a look at the data most people are not considering. Now today alone, the token is up 83%. We are at 1.3 cents. This week we increased by more than 250%. But the rallies in the Fun token don't come consistently. We had several pump and dumps even in this year. And when we look at the all-time chart, at one time the price was at above 17 cents. So there's clearly a lot of volatility. There's always a possibility to come back down, but maybe we can ride this rally by using a trailing stop loss. As in, as the price continues to rise, we just adjust our stop loss. And then when the rally stops, we protect ourselves against the crash because then we get stopped out. We're simply just increasing the stop loss as the rally goes on. Because have a look at history. Just because we recently started a rally doesn't mean we can't go higher. This was an additional increase of 300%, and we came from very similar levels. Now, of course, I don't think a token like Fun is necessarily a great long-term hold, because we always have opportunity costs, right? It's always about, can we outperform Bitcoin or Ethereum with an altcoin? If we don't get the outperformance long-term, it doesn't make sense to hold the token long-term. Now, this is the Fun token relative to Ethereum. And from the top in 2019 to the bottom, the price underperformed by 96%. But even if you include the current rally, still the long-term underperformance was 80%. It does not look that bad on this chart because this is a logarithmic chart, but once we turn this into linear, we can actually see how much the Fun token long-term underperforms. So really, the only viable option to get involved in this token is to do short-term trading, to just ride the momentum, not to buy and hold. Now let's have a look at the on-chain metrics. Let's see what's going on with those almost 100,000 holders on the Ethereum chain. So the exact number is 97,544. That's how many wallets on the Ethereum chain hold the token. What we're seeing over here is the number of small investors versus larger investors. The way we make this distinction is by looking at the minimum holding thresholds. So to be counted for the wallet on the left, we need to have at least 10,000 tokens in that wallet. Now, at the current price, that's roughly $100 worth of the token. In the middle, it's a 10x from that, so that's now $1,000 worth of the token. On the right, another 10x, so that's $10,000 worth of the token. We don't really see that much accumulation over time. We do see a sharp drop that happened in the middle of April of this year. If you know what caused that drop, then feel free to comment this down below, and then we can get into a bit more detail of that event as well. But in general, the number of investors clearly is not growing anymore in the last few months, potentially years. So since middle of 2022 roughly. What's also noteworthy is that despite the Fun token going up that much recently, it's not one of the trending tokens on the Ethereum chain. So this is dexscreener.com. It's the Ethereum chain. We're looking at the trending tokens in the last 24 hours. When we order this by the liquidity pool size, we do not find the Fun token. Actually, when we search by the Fun token's address, we don't see much liquidity at all on the chain. The largest liquidity pool has only $24,000 worth of Fun. Now, this tells us that all of the price discovery happens on the centralized exchanges. There is really no transparent market making on the chain anymore, and so we can't really know how much manipulation there really is. Actually, once we dive a bit deeper, we do see hints for price manipulation. Let me show you what I mean. Here is the trading volume on the spot market. And this is all centralized exchanges, and it's led by Binance with 90 million worth of trading volume in the last 24 hours. The perpetual futures market had way more trading volume, almost 3 billion worth of trading volume. So really, all the price discovery happens on the perpetual futures, on the bets, on the price with leverage. Because everybody that deals with perpetual futures doesn't really want to hold a token long term, because financing costs for perpetual futures are very high. So everybody that deals with perps just wants to trade very actively with very narrow bid-ask spreads. And so when there's so much more trading volume on the perps and the price inflates like this, this is all leverage driven. Have a look at this. This is the funding rate across centralized exchanges for the Fun token over time. It used to be extremely negative. What that means is that most perpetual futures traders were betting on falling prices. So the shorts had to pay the longs in order to bet on falling prices. Thus, the market makers and the centralized exchanges have an incentive to short squeeze those people, to push up the price on the spot market in order to force liquidate the people that are betting on falling prices. When there's a lot of short interest, when the funding rate is negative, we tend to see the price shoot up very quickly. And then once it's high enough, all those shorts get liquidated, then the funding rates balance out more, and then the price can deflate again. We saw massive short interest again when the price was at half a cent roughly, then another squeeze, we went up to 1 cent. And so this is how the price goes further and further up while the shorts get liquidated. And we are getting a bit more balanced in the funding rates again. Still, the majority is betting on falling prices, so the rally can continue a bit longer. But it's not as extreme anymore as it used to be. Have a look at the liquidations over time. It's mainly the shorts that are getting liquidated, so the people that are betting on falling prices, so the market makers, the manipulators, they just push up the price. And so have a look at the open interest over time. So this now shows how many bets are currently made on the price. What's the US dollar amount on the bets of the price? When this is very high, then the price tends to be inflated. When the number of bets, the dollars that are bet on the price, when that goes down, the price tends to follow. Just have a look at that lag, right? A lot of open interest, which then declined, and then subsequently the price went back to normal. Recently, again, we had another rally of open interest. And I don't think it makes sense to bet on falling prices just yet. I think it's better to wait for the open interest to come back down. And once that's happening, then the spot price is likely going to follow. And it makes sense to, at that point, bet on falling prices. We're likely going to see history repeat itself. I believe things will play out very similarly to April of this year. But again, we don't know when the speculation on the Fun token will slow down. It's better to first wait for the turnaround in open interest before betting on falling prices. But in general, I think this is where currently the money in crypto is made. It's not trying to find the few winners, because really this is a game of trying to find the needle in the haystack. And obviously the odds are against us, right? If you try to buy altcoins, if you maybe have a diversified portfolio of altcoins, you're likely down, you're likely doing worse than Bitcoin. Most altcoins underperform Bitcoin most of the time. Most bubbles here are red, despite Bitcoin going up. And there are different ways to make money with falling prices. Either we get those occasional short squeezes, right? When the price rallies very quickly. This here is now Dogecoin relative to the rest of crypto. So the Dogecoin dominance. We see the quick short squeeze, then the subsequent deflation. Something very similar to what we're now observing with the Fun token. We have our short squeeze, and then we can make money while the price goes back to normal. Or alternatively, we can bet on falling prices of altcoins that just continue to go down very consistently because of very bad tokenomics. So when a token has an increasing token supply, this is now Balancer, for example. When the supply of a token grows and grows and grows, then it tends to also do worse than Bitcoin and Ethereum over time because the demand cannot grow as quickly. And yes, of course, when Bitcoin and Ethereum goes up, then even Balancer goes up in US dollars, but relative to Bitcoin and Ethereum, it will still not outperform. This is a very constant underperformance, and we can make money from that. We can basically invert this chart. So that's how the chart looks inverted, right? We're making money by betting on falling prices of Balancer relative to Ethereum. So let's say in the last 1.5 years, this went up by 350%. Isn't that much better to bet on a chart like this compared to trying to find the one winner in an overview like this? Really, to make money in crypto, we have to be smarter than the rest. We can't do the same approach as everybody else, try to research fundamentals in an altcoin and then build an altcoin portfolio. Most people lose money this way. I've actually made several tutorials on that topic, how we can bet on relative evaluations. So for example, over here, gaining from relative valuations using Aave, or over here using the hyperliquid perpetual futures platform. And then of course, it's all about managing risk as well. Because even though we are betting on charts like this, we don't want to completely lose our portfolio just because we bet too much on a single position and then we exit with leverage during a downturn like this, right? This is still a 30% drop. So those kind of things can happen. If you're in the position with 3x, you're going down 30%, you've lost everything. So risk management, while not necessarily being a very sexy topic, is incredibly important. And so here are example trades, how our community makes money currently. Of course, with some leverage, doubling a position is relatively straightforward, but it's all about doing this again in a smart way. Here's my portfolio development over time. So on the x-axis is the number of months. So this is now almost 4 years. If I just dollar cost averaged into Bitcoin, I would have gotten this gray line. But because of the shorting and relative valuation bets, I compounded my money way faster than just by buying and holding Bitcoin. So feel free to check it out. It's currently $125 per month. It used to be 165 when everybody was crazy about Bitcoin and altcoins. Now the attention on crypto is lower, and so you can lock in that price. So when you subscribe now, I will not increase the rate for anybody that's already subscribed. The link to the sign up page should appear directly over here on the screen. Just click on that. It will lead you to the website. If it's your first time over here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.